How to find deeply undervalued stocks. What's going on, guys? I hope you guys are doing great today. You know, I always get asked this question by my friends and family. Jake, how do you find these great opportunities, these deeply undervalued stocks? Do you watch CNBC? Do you follow someone on Instagram? Do you read blogs? Well, the answer, guys, is that there's three main ways that I find these deeply undervalued stocks. So the first way that I like to begin my search process for these deeply undervalued stocks is through one of my scanners. And this scanner is called the TIP Finance Multiple. And I actually found out about this scanner, or this filter, I think it's technically called, through a video here on YouTube. Now, before I talk about how awesome this filter is, I just want to say I am not getting paid to talk about this product. I wish I was, because I absolutely love it, and I'm about to explain why, but I am not being paid to promote this product. However, I will leave a link in the description if you want to check it out. So I use a lot of free scanners online. However, this one is actually a paid one. I think it comes out to about $45 a month, and I know that is a little pricey. However, you can cancel it anytime. It is a month-to-month subscription, and honestly, I do just that. When I have excess cash levels and I need to find an opportunity to deploy cash in, I will just buy a month's worth of this subscription and see if there's anything that pops up. And honestly, guys, 1 month of digging through that scanner is more than enough time to see if there are any opportunities that you understand and is selling at a great discount. Now, personally, I have used this filter or scanner, you can call it whatever you want, and I have found 3 really great opportunities that I have invested heavily into. And I'm not gonna lie, they have turned out to perform really, really well, and they have more than covered that $45 investment into the subscription service. So if I were you and you really wanted to find opportunities that were in your circle of competence and that were selling at Warren Buffett-like entry points and had great fundamentals, then I would consider investing in just 1 month of the subscription, $45, see if you like it, and if not, you can cancel it anytime. But I'm here to tell you, I have found 3 of maybe, I don't know, like 12 of my investment ideas over the past 2 years from this filter, and they have been some of my best performing ideas. Now, I'm not gonna get into the details of how the filter actually sorts out what stocks and like what it is looking for in these companies. It talks about that on the website, but I will say this. The filter was engineered and designed by value investors and people who nerd out over Warren Buffett. So if that tells you anything, then I don't know, maybe give it a try, because the guys that created it are hardcore, loyal value investors, and they look for the same exact things that I look for in a company. But again, guys, I only use this filter when I need it, and when I don't need it, I cancel the subscription. And to tell you the truth, I really don't need it that often, and here's why. So last week, guys, I got lunch with a friend, and he was asking me about the YouTube channel, and he was asking me about my stocks, and he asked me, how many stocks do you own, Jake? And I said 6, and he looked at me like he was just struck by lightning or something. He goes, 6? Just 6? And I go, yep, just 6. And I said to him, dude, 6 businesses is more than enough to make you rich in a lifetime. And he still just didn't understand. I said, okay, let me break it down. You see that McDonald's over there? And he goes, yeah, I see the McDonald's. And I said, okay, let's say you decided to buy a McDonald's franchise. And let's say that you were running it for 2 years and you were doing really well. And then during those 2 years, you were learning so much about the fast food industry and how it works and whatnot and what doesn't work. You were failing in some things, but overall you were doing really well. And after 2 years, you gained a lot of confidence. And so you said to yourself, okay, well, you know, there's a location down there that I think this franchise would do really well over there too. So you buy another franchise of the McDonald's restaurant and you keep expanding. And after 10 years, you have 10 franchises and you are a multi-millionaire by now. And so now you have about 10 years of experience with the fast food industry. You know the pros and cons, you know the ins and outs, and you know how to make it be successful, right? And let's say that I come to you and I say, hey dude, do you want to buy a pharmaceutical company? You would probably look at me like I was crazy, because all you know is fast food. It would be really dumb if you took a big gamble in an entirely different industry that you knew absolutely nothing about. However, let's say that you want to open up another McDonald's franchise because you just know how successful they can be, but McDonald's comes back to you and says, yeah, you can open up another franchise, but it's gonna cost you a lot more to do it. It's gonna cost a lot more to use our licensing agreements and, you know, the McDonald's rights and our logo and whatnot. And now you're kind of stuck in a conundrum and you're scratching your head and you're like, I don't know if it's going to be worth the investment to open up another franchise because it costs so much more to do it. So now you start to look for other opportunities that are still in your circle of competence. So maybe Subway is selling franchises at dirt cheap prices and you think there's an opportunity there. So you begin to open up Subway franchises. I hope you guys are starting to see the point here and how you should be treating stocks like businesses. So for example, guys, during my day job, I work for a home builder. I do marketing for a home builder out here in California, and I know a lot about the industry. And recently, during one of my scans on that filter that I just talked about, a home building company called Meritage Homes popped up. And I read the 10K and it was a really easy read. And that was only because I knew the language. I knew a lot about the industry and it made sense. And then I did an intrinsic value assessment and I realized that it was selling for a steep discount. And so this isn't financial advice, but I did end up buying the stock. And at the time it was about $85 a share. And honestly, with every paycheck I get, I allocate more money to that stock because at the current price level, it makes sense to continue buying. However, let's say Meritage appreciates to $200 a share. Well, then it's gonna make a whole lot more sense to find another opportunity because my returns aren't going to be as great. At this time and this time only is when I will begin to pay the subscription for the $45 a month fee, or I will begin the research process for new opportunities. Now, I know that was kind of just like a big long rant, but the point I'm trying to make is that if you want to be a successful investor, you shouldn't be spending most of your time looking for new businesses to invest in. In fact, you should be spending most of your time trying to understand the industries that your current investments operate in even better so you can make better decisions going forward. But in the rare occasion when your cash levels do get above 30, 35, maybe even 40%, and it's time to start looking for opportunities because none of the investments you have are selling at a great discount anymore, which go you, they have appreciated in value. Happy for you. Then it's time to begin looking for stocks. So with that said, let's move on to the second way to find deeply undervalued stocks. Now, the second way you can find deeply undervalued stocks, or at least the way I do it, is through using Value Line. Now guys, Value Line has been around since 1931. It's pretty crazy. And Warren Buffett speaks very highly of Value Line. And this is interesting because Warren Buffett doesn't speak highly of any analyst or any sort of business journalism. However, the fact that he appreciates what the analysts write about in Value Line, it means it's legit. It's good content. Now guys, Value Line unfortunately is like $600 or $700, maybe $500 a month. It's outrageous. However, I have good news because I found a hack. Well, actually Brad Kellner in his channel told me about this hack. So shout out Brad Kellner. But if you go and sign up for an out-of-state library card through the Virginia Fairfax Library, I know, super random, and you pay $30 a year for that library card, you actually get complete access to Value Line completely for free. Well, besides the $30 membership fee. But I will leave links to Value Line and the Virginia Fairfax Library registration page in case you're interested in that. I highly recommend it. I have gotten a few ideas from Value Line and I think it's great. And the third way that I love to find deeply undervalued stocks, guys, is actually here on YouTube. And I'm here to tell you it is my favorite way to find stocks. There are like 3 or 4 channels that I follow on a daily basis. Like whenever they post a video, I'm watching. One of them's Brad Kellner, Investing with Tom, Investing with Frank. I'm forgetting a couple others. I will put links to all of their great channels in the description. And guys, I got a degree in finance. Not that I'm like a finance wizard, but I did get my degree in that. I have met people that work in investment banking, mutual funds, hedge funds, these, big know-it-alls, these bigwigs. And I don't mean to throw all of those people under the bus, but you would be shocked at how smart some of these content creators are. These are just everyday guys like you and me, retail investors that have a deep flipping passion for value investing. And they, I'm like getting emotional, this is weird, but they have taught me so much. And I wouldn't have probably even started this channel without these channels. I would highly recommend going and checking them out. Again, links in the description. They talk about value investing. They also talk about stocks that Warren Buffett, Monish Pabrai, all these guru investors are buying. Phil Town, they do portfolio updates of these guru investors. I really think you should check them out because their content, I'm not trying to make myself sound bad, but their content's phenomenal. So go check them out. Huge shout out to those guys. So anyways, guys, those are the 3 ways that I like to find undervalued stocks when I need to. Again, It isn't that often. It's maybe once or twice a year that I go looking for stocks. And that's only when my cash levels get above 30-35% and I need to deploy cash into a new opportunity. Because if you hold on to cash, that is only going to do you harm in the long run. But anyways, guys, let me know what you thought of this video. Leave a comment, leave a like. It helps me grow my channel. I hate begging for likes, but the truth is YouTube likes. That was weird. But yeah, you are awesome, and I'll see you guys in the next video.